What if some of the best investment opportunities of 2026 are hiding in plain sight, right here in the very first month? There's a fascinating market pattern known as the January effect, where stocks that got hammered last year can suddenly come roaring back. But it's not all good news. It also creates some nasty traps that could wreck your portfolio. In this video, I'm breaking down our top 3 stocks to watch this January. We've got 2 companies that look ready for a major rally and one popular name that might just be a ticking time bomb. So, what's the January effect? You've probably heard of it, but what is it? The January effect is this long-observed pattern where smaller companies tend to outperform the big guys in January. The classic explanation is that investors sell their losing stocks in December for tax purposes, a strategy called tax loss harvesting, and then buy them back in the new year, pushing prices up. On top of that, you have year-end bonuses and fresh capital getting put to work. Heading into 2026, the setup looks interesting. After years of underperforming the market giants, U.S. small-cap stocks are trading at a significant valuation discount to large caps, with some analysts noting the gap is near historic levels seen around the dot-com bubble. Plus, with markets anticipating a more favorable interest rate environment, many are hopeful for a small-cap comeback. But, and this is a big but, the January effect isn't a sure thing. In fact, many analysts argue the effect has weakened significantly in recent decades. While it was a strong trend for much of the 20th century, some recent studies show January's performance is now closer to a coin flip. It's a compelling historical pattern, not a crystal ball. Okay, now that you get the theory, let's talk stocks. Here are the 3 companies on my January effect watch list. Stock number 1, NVIDIA, NVDA, the AI behemoth. First up, we have NVIDIA. Now, I know what you're thinking. A mega-cap stock like NVIDIA isn't a classic January effect play, and you're right. But it's on this list because the relentless demand for its AI chips keeps it positioned for powerful growth, no matter the month. The demand for its next-generation chips for data centers and cloud computing remains sky-high. However, the situation with U.S.-China trade relations adds a layer of complexity. Navigating export controls on advanced AI chips to China remains a significant challenge and a key factor to watch for anyone invested in the sector. Stock number 2, Micron Technology, MU, a high-stakes wildcard. Next, let's talk about a true wildcard, Micron Technology. This one is exciting because it sits right at the intersection of the AI boom and a potential recovery in the semiconductor market. Micron's high-bandwidth memory, HBM chips are critical for running AI applications, and demand is through the roof. Because of this, some analysts are projecting explosive earnings growth for the company. But here's the catch. Sky-high expectations create a very high bar for execution. If Micron delivers anything less than a home run on its earnings, the stock could face serious volatility. It's a classic high-risk, high-reward scenario. Stock number 3, Western Alliance Bancorporation, WAL, a mid-cap financial play. Finally, let's look at Western Alliance Bancorporation. While it's often mistakenly called a small cap, WAL is actually a mid-cap bank with a market capitalization of over $9 billion. It lands on our list as a company that could benefit from the broader economic trends associated with the January effect. As a regional bank, its fortunes are closely tied to interest rates. A potential easing cycle from the Fed could improve lending conditions and reduce the cost of capital, providing a tailwind for banks like WAL. The financial sector often sees a rotation of interest at the start of the year, making this a space to watch. While the idea of a January rally is exciting, it's crucial to stay grounded. As we've seen time and time again, market trends are not guaranteed and can be easily disrupted by unexpected inflation data or shifts in Fed policy. The January effect, though historically documented, has become much less reliable. Some data shows its success rate has fallen off in recent decades, with January sometimes being one of the worst performing months. The pattern seems to be most pronounced after a year where there was a huge gap between the performance of small and large stocks, much like we saw in 2025. Think about this. For investors looking to navigate the market in early 2026, the combination of more attractive valuations in certain sectors, hopes for a friendlier Fed, and strong earnings projections creates some compelling stories. However, the risk is elevated, especially for high flyers like Micron that have huge expectations baked into their stock price. This year's volatility is a sharp reminder that it's essential to monitor the big picture economic data and practice disciplined risk management. If you're getting some value out of this breakdown, go ahead and hit that subscribe button and turn on notifications so you don't miss what's coming next. And I want to hear from you. Drop a comment below with your own watch list for January. What stocks are you keeping an eye on? Conclusion. So, to recap, the January effect is a potential opportunity for investors, and it's especially interesting in 2026. We've looked at 3 very different stocks to watch: Nvidia, the AI giant that plays by its own rules; Micron, the high-growth wildcard; and Western Alliance, a mid-cap financial that could ride a positive economic wave. Remember, while seasonal trends can be a useful guide, they are no substitute for solid research and careful risk management. Thanks for watching. Don't forget to like, subscribe, and hype this video up. YouTube thinks you'll like these recommended videos, so please check them out. I'll see you in the next video. Cheers!